Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the market positions for February the 18th, 2010. Now, for tomorrow's trade, we're going to be looking, our first position is going to be in the futures contracts, again in the RBOB gasoline contracts. Now, we can see here we're again starting with the triple EMA crossover that I'm sure everybody knows by now. That's where I like to start. So we're going to identify our major levels of support. We've got 196.47, 195.71, and 197.58 with a close of 2.0071. Now we've closed above all of the three predicted moving average. That's the first good sign. Now the second sign here that we're looking at is we have the 3-day crossing over both the 8-day and the 18-day predicted moving average from Vantage Point. The 3-day crossing over both the 8-day and the predicted 18-day moving average is a leading indicator of a potential trend reversal. So what we're going to do here now is we're going to go in, we're going to use the properties, and we're going to go into the short, the medium, and the long-term crossover. So hitting the short-term crossover, we can see that this took place. The leading indicator was the short-term crossover, which took place back on, looks like about February the 10th that crossed over. We're then going to pull up the medium-term crossover, see if that agrees. It does. We can see that that's just recently crossed over in the last day or two. Now we're going to switch one more time and we'll look at the long-term crossover. Now we can see here that the long-term crossover also a few days ago has confirmed higher. The long-term crossover, of course, being the 6-day predicted exponential moving average from Vantage Point crossing over a standard 15-day simple moving average. So now that we've got our directional bias, we've got our leading indicators have given us a good indication. Because we've had this aggressive move, we're going to just very quickly here, we're going to go on to the predicted RSI from Vantage Point and see if that's still in pretty good territory. So we can see here that we've got the leading indicator, the 3-day going over the 8-day and the 18-day predicted moving average. We have the short, the medium, and the long-term crossover all crossing to the upside. We also now have the predicted RSI from Vantage Point not in overbought territory, suggesting that this has room to extend. So very interesting that we're compiling all of these indicators together. Now another indicator, which is Vantage Point's own indicator, is the predicted TSI, the true strength indicator. So the true strength indicator we can see has just recently crossed over to the upside in oversold territory with very clearly we have plenty of room to extend on this. So a number of indicators here from Vantage Point all suggesting we're going to get a trend reversal on the RBOB gasoline contracts. So again, very interesting what's going on here. So we've surmised that we're going to go into a buy position using the 3, the 8, and the 18-day exponential moving averages from Vantage Point along with the crossover. So now we're going to go in, have a look at the daily report from Vantage Point and see what we have here. So for tomorrow, we can see where we have our close. Our predicted low for tomorrow, 196.88, so somewhat of a shallow pullback. The neural index is up. So when the neural index basically is a directional indicator also, it's going to, the 1 being up, the 0 meaning down, and over a 24-hour period. However, we're going to wait for a pullback. The beauty of the Vantage Point's software with its predictive nature is we can identify an area where the market is likely to go to. So 196.88 is the predicted low. We're going to be looking for a move to 201.46. So now that we have that predicted low, 196.88, we're going to go back into the triple EMA crossover and have a look and make sure that these coincide. So we can see that the predicted 3-day exponential moving average from Vantage Point at 197.58 also supports this move. So in this particular case, all our stops will be below 196.47. Because again, we don't want to get caught up in this intraday stuff, so we're going to use the Vantage Point predicted low of the day in that 198.66 area, 196.88 area. We're just going to go back and quickly review that. Always good to look at things. Again, 197.58, the 3-day exponential moving average from Vantage Point. We have 196.88 as the predicted low. So we'll be basically, we're going to identify that key buy zone for tomorrow. So the key buy zone for us is going to be between 196.88 and 196.57. So it's a very narrow range. Anywhere in that area is a good buying opportunity, and then we're going to be looking for a move towards this $201.46. I think is a very good area to look at. So that's our first position for tonight. We're now going to go into our second position. Now our second position for tonight is going to be gold contracts. We're going to be looking at futures or the spot market, the continuous contracts on gold. So again, we have this leading indicator, this 3-day exponential moving average from Vantage Point crossing over both the 8-day and the 18-day predicted moving average. We have the 8-day predicted exponential moving average from Vantage Point getting ready to cross over the 18-day. So this is a leading indicator for a trend reversal. Now what we're going to do is we're going to identify our key levels of support: 1095.80, 1095.90, and 1108.70 with a close of 1119.50. So clearly 1108.70 is going to be a target area for us. We're now going to go into the daily report from Vantage Point, and we're going to look at what we've got for predicted highs and predicted lows for the day tomorrow. Okay, now looking at this, we've got 1107.30, 1127.50. So again, the neural index pointing up. This is a leading indicator, of course, that we may get a move up, but we are going to trade a range during the course of the day. Unfortunately, nothing just goes straight up and nothing just goes straight down. It's going to move inside that daily range. So once it hits its high for the day, it's likely going to go after its low for the day, and then it's going to continue with the overall trend or the bias of that trend, which for now appears to be up. So 1107.30 is our predicted low for tomorrow. We're going to be looking for a move to 1127.50. So 1107.30 is our key price, and we can see here that the 3-day exponential moving average from Vantage Point sits at 1108.70, which is very good. It coincides with the predicted low of the day. This brand new trend, whenever we're in a fresh trend from Vantage Point, the 3-day is always the good one to use. All our stops again are going to be below the 18-day exponential moving average from Vantage Point at 1095.80. Now we are going to go in here because gold has also made a fairly aggressive move up. So what we're going to do is we're going to run through our routine here. We're going to hit our short-term crossover. We're going to hit apply here, just to make sure everything still looks good. So we can see that this crossover is taken place to the upside, on about the 9th of February. We're now going to go to the medium-term crossover from Vantage Point. We're going to hit apply. Again, we can see that this crossover has taken place here just a few days ago. We're now going to have a look at the long-term crossover from Vantage Point. Again, we can see that this has taken place about a day after the medium term. Everything looking good for an extension for a move higher. So essentially what we're looking at here now, we're into a buy on dip scenario. Now again, whenever you can see these long candlesticks that have moved up, that's the daily range. This is a very wide daily range. So whenever we see things like that, we're going to look at the additional indicators from Vantage Point, specifically the predicted TSI, the predicted RSI. Both are very good directional indicators and indicators that will tell us whether something is overbought or oversold. So again, we can see here the predicted RSI is a leading indicator. It's telling us that this is overbought. So in a scenario like this, when the market pulls back to an area that we've pre-identified, essentially before the market gets anywhere near that area, in that 1108 area, we're going to use this overbought signal here that when it pulls back to get into a buy position off of that 1108 area. So it's very good to use multiple indicators from Vantage Point. Now to take it one step further, what I'm going to do here is I'm going to add the predicted MACD. When I do this, I'm just going to take this RSI off for a minute to make sure everybody can see this okay. Hit OK, so we can see here that the predicted MACD has plenty of room to extend. So the predicted RSI is the only one that's giving us an overbought signal, but it's still worthwhile to look at that to make sure that everything's still, the overall bias of the trend up is still in place, or in this particular case, a trend reversal is in process. So again, a buy position on gold, 1108 is the key area we're going to be watching. We're going to be waiting for it to pull back to get into those buy positions. So again, I want to thank everybody for viewing this, and my name is Greg Furman, market analyst here at TraderPlanet.com.